In 2010, a programmer bought 2 pizzas for 10,000 Bitcoin. Today, those same Bitcoin would be worth over $600 million. That's the power of Bitcoin. Whether you're curious about cryptocurrency or looking to make your first investment, this video will give you everything you need to know about Bitcoin in 2025. Let's dive in. Bitcoin is the world's first decentralized digital currency. But what does that actually mean? Think of Bitcoin as digital cash that exists only on the internet. Unlike traditional money controlled by governments and banks, Bitcoin operates on a peer-to-peer network. No single authority controls it. Bitcoin was created in 2009 by an anonymous person or group using the name Satoshi Nakamoto. The identity remains a mystery to this day. Here's what makes Bitcoin revolutionary. It's the first digital asset that solved the double spending problem, preventing someone from spending the same digital coin twice. This was achieved through a technology called blockchain. There will only ever be 21 million Bitcoin in existence. This scarcity is programmed into the code, making Bitcoin deflationary by design, the opposite of traditional currencies that governments can print endlessly. Bitcoin runs on blockchain technology. Imagine a digital ledger that records every Bitcoin transaction ever made. This ledger isn't stored in one place. It's duplicated across thousands of computers worldwide. When you send Bitcoin, your transaction is broadcast to the network. Miners, specialized computers, verify your transaction and add it to a block of transactions. Once verified, this block is added to the chain of previous blocks. Hence, blockchain. This process is called mining. Miners compete to solve complex mathematical puzzles. The first to solve it gets to add the next block and receives newly created Bitcoin as a reward. This is how new Bitcoin enters circulation. Every transaction is transparent and permanent. Anyone can view the blockchain, but your identity is protected by cryptographic addresses, long strings of numbers and letters. The decentralized nature means no single point of failure. No government, no company, no individual can shut down Bitcoin or reverse transactions. Let's talk about the practical stuff, how to actually buy and store Bitcoin. First, buying Bitcoin. You'll need a cryptocurrency exchange. Popular options include Coinbase, Binance, and Kraken. The process is simple. Create an account, verify your identity, connect a payment method, and purchase Bitcoin. You can start with as little as $10. Next, storage. You have 3 main options. Option 1. Keep your Bitcoin on the exchange. This is convenient but means the exchange controls your Bitcoin. Remember, not your keys, not your coins. Option 2. A hot wallet. Software on your phone or computer. More control but connected to the internet means potential hacking risks. Option 3. A cold wallet. A physical device that stores your Bitcoin offline. This is the most secure option for long-term holdings. Now, let's address the elephant in the room, volatility. Bitcoin's price can swing 10 to 20% in a single day. This isn't a get-rich-quick scheme. It's a high-risk, high-reward asset. Security tips. Never share your private keys. Use two-factor authentication. Be wary of scams promising guaranteed returns. If it sounds too good to be true, it probably is. Should you invest in Bitcoin? That depends on your financial situation and risk tolerance. Many investors view Bitcoin as digital gold, a store of value that's resistant to inflation. Some allocate 1 to 5% of their portfolio to Bitcoin as a hedge against traditional markets. There are 2 main approaches. Long-term holding, often called hodling in crypto culture. This strategy involves buying and holding for years, regardless of price swings. Historical data shows Bitcoin has rewarded patient investors despite dramatic crashes. The second approach, active trading. This involves buying low and selling high, trying to time the market. Warning: most traders lose money. The volatility that creates opportunity also creates risk. For beginners, here's the golden rule. Only invest what you can afford to lose. Bitcoin should be part of a diversified portfolio, not your entire savings. Consider dollar-cost averaging, investing a fixed amount regularly, regardless of price. This strategy removes emotion from the equation and averages out your entry price over time. Remember, past performance doesn't guarantee future results. Bitcoin could go to $1 million per coin, or it could drop significantly. No one knows for certain. Let's recap. Bitcoin is a decentralized digital currency with a fixed supply of 21 million coins. It operates on blockchain technology, offering transparency and security without central control. To get started, choose a reputable exchange, start small, prioritize security, and never invest more than you can afford to lose. Bitcoin represents a fundamental shift in how we think about money. Whether it becomes the future of finance or remains a speculative asset, understanding it is crucial in our increasingly digital world. Want to learn more? Check out the resources in the description below. And if you found this video helpful, subscribe for more cryptocurrency education designed for beginners. The Bitcoin journey starts with education. You've taken the first step today.